It took me a long time to find success as a trader, but that's because I made a ton of mistakes and had a lot of losses over the years. Yet each misstep was a lesson, and in that time, I learned many trading concepts and strategies that helped me dramatically improve my success rate as a trader. I've boiled down my entire knowledge into 3 of the most important concepts, and I'll reveal them all in this video. Number 1, it's important not to be impulsive and take trades based on FOMO. This happens way too often for those that are uneducated, for those that are actually veterans of the market. A lot of people kind of fall into this. I see a green candle, it's gonna go up, I need to buy it right now. There's no rhyme or reason, they just have this feeling. When I look and analyze at charts, I am making a decisive decision based on how a stock reacts at what is known as a point of reference, a level that I'm watching that I know dynamically the market could be watching as well. But if you don't have a strategy, if you don't have indicators, if you don't even have any information, we're now looking at this as an impulsive trade. So think about the context here. Stock is going up, everybody wants to buy. And this is kind of where the market is almost reversed to what our normal everyday lifestyle is. How many of you will buy things on sale? How many of you negotiate prices on items? Do you buy your vehicles above market price? Would you look at your house, let's say it's valued at $400,000, and be like, no, I want to pay $600,000? And if the answer is no to all of the above, then why are we doing it with stocks? The psychology is really weird because the belief is that the price is going up, I need to buy. But with no analysis, knowing how far it may have already moved, where it could go into resistance, people tend to buy the top. And that's okay, veterans will do it as well. The veterans will actually look to liquidate and take their small loss when it starts to go against them. The problem is those that don't know end up holding too long, having that stock completely retrace, dealing with a heavy duty loss. And even if it rallies back, they have nothing to show for it. They're at break even or maybe possibly down. We also need to consider risk management. As a trader, we want to know exactly how much we are willing to risk every time we enter the market. The risk will be different based on the moments that we enter. And ultimately, do we want to over leverage one position? How do we know that's the moment that we're going to be quote unquote rich or successful? This is important. I'm analyzing the situation very quickly. I know what my upside or downside is going to be. I know my reward relative to my risk. I know the moments that I want to trade based on what the stock is doing and in context wise where that stock is at that moment. And listen, I have never met anybody in my lifetime that's never lost in the stock market. If you've ever heard someone that say, I've only had 100% win ratio, call them out. It's BS. Losses are a part of the game. That's why we are talking about risk management. And as a trader, people tend to put too much pressure on themselves to win at a 70, 80, 90% clip, when the average successful trader generally wins around 50 to 55%. And you wonder how we could get away with this. It's because of risk management. It's because we're able to keep losses small and ride out our winners. Number 2, thinking like other traders is important to catch moves in this market. I'm not worried about the guy next to me. I'm not worried about what they're trying to do. For me, as a trader, I am worried about what the market is trying to do. Is it buyer sentiment, seller sentiment? Can we see that reversal at this moment? Are we trading with the trend or against the trend? I'm sure that some of you may have really substantial size accounts, but in the world of Wall Street, we are still the guppy in the pond. We are the small fish. You could pile in 15, 20, $50 million into a trade and effectively get absolutely run over. We are not trying to outsmart the market. We are trying to align ourselves with the market. So we have to say to ourselves, what is our edge? The edge is actually trying to figure out what the rest of the markets are trying to do. Informed traders. This is a key word that I want you to put into your vocabulary. Are you an informed trader? Do you know what's happening? Can you take analysis and truly pinpoint moments? Are we trading blind is the equation. If you are trading blind, if you don't know what's going on, you're not sure which way it's going to go, are we informed or are we guessing? Now, we also have to ask ourselves, where are the buyers and where are the sellers and who is in control? That is what trend is being dictated. Now, if a stock has a high and a low established and all it's doing is bouncing around in between, there is no direction. There is no control. Ultimately, you're just trading that range, buy low, sell high. But if the stock continues to rise throughout the day, continue to rise for multiple days, continue to rise for multiple weeks. Why do we think that we should short that stock as opposed to buy and move in sympathy with the broad markets? So ultimately, understanding the depth of trend, higher highs, higher lows, lower highs, lower lows, is an imperative component. This is how we can get a better feel of who is in control and who is maintaining control. Number three, trading is not about prediction. It's really about reaction to the markets. A lot of people think that I could predict the future. Charlie, what's NVIDIA gonna do tomorrow? My answer is, I don't know, you tell me. I am not here to predict the future. I'm here to read and react. Now, as a trader, successful traders, if anything, understand their outcomes. Positive outcome, negative outcome, sideways outcome. This is how we plan around our trades. But ultimately, we have people making these outlandish predictions, basically suggesting to others they know which way it's going to go. No. They know where it possibly could go, but they'll never truly know if we are going to see the stock get to that level until we actually get to that level. So this is where I will preach to you folks. Stop trying to predict the outcomes. The read and reaction has worked since trading, or the stock market trading, was created and invented. People read the ticker tape right back in the day, saw the numbers go on the chalkboard, and then make their speculation. This is something that we have to understand. As traders, every trade we take is speculation. Now, we may have a lot of conviction, but we need to be very careful about veering over that line where we're thinking that we are predicting what the stock is going to do. Now, we also have to understand the potential of loss. When we're analyzing our losses, we have to ask ourselves, why were we on the wrong side of the market at that moment? Did we trade within our plan? Did we approach it? Did we see what we wanted to see? Were we maybe possibly a victim of circumstance? But what's really important in these scenarios is that we need to understand what the risk that we're taking in the moments that we decide to get in the markets. We know exactly how much we're willing to lose to make what the potential opportunity is trying to provide. So when we analyze our losses, we need to look back and see why the trade didn't work out, see if there's something that came up, especially if there's consistency with our losses, and then correct those measures going forward as our trader. There's also something in terms of growth. Maybe you are having success. You're now trying to implement new information that you've discovered and learned, new strategies that you're trying to implement into your trading. Remember, as traders, individually, we all have different personalities. We've grown up with different environments. We may view money differently. We may make money differently. Will we have cash on hand from one individual to the next could be very different as well. So this is where I implore people to not try and be like some other individual, but be yourself. Trade within your own skin. Trade with your own personality. Understand what your emotional state is relative to money. There's risk takers and there's those that are risk adverse. While a foundational understanding of these concepts sets the stage, it's the mastery of a high-performing trading strategy that truly unlocks profitability. So if you're looking for a successful, proven trading strategy that has the potential to be constantly profitable, click on this video over here. Please remember to like, comment if you have any questions or suggestions for new videos, and I'll see you in the next one.